Hi guys, welcome to the Road to Future Strategy Guide. I'm going to start off by showing you a few slides. So if you want to skip them and go directly to the live forward testing with the strategy that I'm about to explain, you can take a look in the description below to go to that place directly. So on the agenda, we are going to explain the strategy type, liquidity levels and sessions, fair value gaps, higher time frame bias, entry model, money management. The type of strategy this is, we are going to trade NAS100 or NQ futures, trying to trade with a trend instead of against it. Well, actually, I've changed this up a bit. There are two types of trades I will be focusing on. Number one will be a trade with the trend, and number two will be a retracement trade. I'll show you more about that in the live explanation on the live forward testing. Taking trades following the higher time frame, 4 hour plus 1 hour, and entering a trade from the lower time frame, 15 minute. To use the strategy, you must already know what is forex trading, price and candlestick structure, and how trading works in general. You must also have knowledge on software you will be using to execute and manage your trades, like, for instance, TradingView is the first one. The second most popular trading software would be MetaTrader 4 or 5. We will also be making use of trading terms based on ICT teachings, thus a basic knowledge of ICT is recommended. Liquidity levels and sessions. What is liquidity levels? It is areas where pending bulk buyer and bulk seller orders are sitting ready to be activated once the market price trade to that level. I'll show you exactly what this is once we get to the live forward testing. All right, examples of liquidity levels. Above and below highs and lows of trading sessions, weekly highs and lows, daily and 4-hour highs and lows, weekly and daily open price and gaps, daily, weekly, 4-hour fair value gaps. These I'm going to mainly focus on. Session times we will work with is an Asian session from 6 p.m. to 3 a.m. EST, or now DST since it's daylight savings. London session 3 a.m. to 9:30 a.m. DST or EST. The reason why we ended at 9:30 is because that is when the New York macro session starts. The New York session starts. So that's why I love to target this specific time for the end of the London session, because New York session can open, slowly take out the liquidity that was already created before 9:30 a.m. and then go in a specific direction. So New York session then starts at 9:30 to 6 p.m. not a.m. sorry about that, EST or DST. Fair value gaps. Fair value gaps are a 3-candle chart pattern where there is a visible space in between the wicks of the first and third candle. Now this sounds confusing, but simply, what does it say? It's a 3-candle chart pattern, A, B, C, or 1, 2, 3, whatever, where there is a visible space in between the wicks of the first and third candle. The wicks of the first and the third candle inside the body of the second candle. All right, what does an FVG represent? It represents momentum in the market as well as an area where price might revisit, or this is also called liquidity, right? Orders that are during this move, there are pending orders, buy, that's not executed yet, and then when price comes down to them, they're suddenly getting executed, and boom, price reacts strongly towards that. Right, The market moved so fast it left possible buy and sell orders there to be triggered should the market return there and use that as fuel for its next move. Like exactly what I explained just now. The higher time frame bias. The higher time frame bias is simply the overall direction that you will look at for that specific few hours when you look for a trade. Now, the direction we will work with will be based on 4-hour and 1-hour directions, mainly direction with these two together. How will it work? Very easy. We wait for the most recent 4-hour fair value gaps and most recent 1-hour fair value gaps to align. Then we know we will go in that direction for our trade setup. We will show this in the live examples. The entry model. So what is an entry model? It is the strategy that you use to know when to take a trade in the market. It's basically the formation that you make use of, but it's based on a set of rules, right? So our strategy that we will work with is one of 3 methods. Number 1, when a new fair value gap is created on the 15-minute time frame, that's entry number 1, right? Entry model number 2, when a new fair value gap is created on the 15-minute time frame and price retest in the fair value gap itself. That's method number 2. Method number 3, when a new fair value gap is created on the 15-minute time frame and make a 50% Fibonacci retracement or come down to 50% of the fair value gap range. So this sounds like if you want to target a bullish fair value gap, right? So if price goes up, candle 1, candle 2, candle 3, reverse 50% of the way, and then you can take a buy from there. Normally, if you take the third method, you will have a much better stop loss placement and a much better take profit target. You will get more out of that trade. What is money management? So it is the strategy that you use to know how much money you will be risking per trade. This usually depends on the size of your total trading capital, so you can decide how much percentage you wish to risk or even how much dollar amount you wish to risk per trade. Now, this solely depends on the size of your trading capital. So if you want to risk, let's say, a 1% or 2% of your trading capital, then you have a quite large trading capital to work with. But if you have like $100 to trade with, then you rather risk a certain dollar amount, like for instance, $2 or $3 or $5 per trade based on the size of your capital at the end of the day. So take profit. Your TP is the area where if price go to that level, the trade will automatically close and put that profit into your capital or trading balance. A good take profit results would be if you make more than 1.5 or even 2 times what you risked for that trade. So if you risk $5 to make 7.5 or $10, that's a good trade, even more. It depends on how or where your entry model went at the end of the day. So your stop loss. Your stop loss is the amount you are risking per trade setup. Once price reach your full stop loss level, it will close the trade and deduct that amount you risked from your capital trading balance. Now, actually, as price moves, it will tell you how far you are in the stop loss, and you can close your stop loss before it reaches the full amount, but that's up to you at the end of the day. But it's better for your money management rules if you stick to your stop loss rules at the end of the day. So if you set yourself up to risk $100 to make $200, then you risk that $100, that full $100 at the end of the day. So it's just better for your money management, because at the end of the day, you're going to realize or start noticing which trades you are trading that give you better results, and what is the stop loss levels that you make use of, and the amount that you risk on those trades. So the better you manage those trades, or the better you journal those trades, the better your calculations based on money management will be at the end of the day. All right, so I'm not going to waste your time any further. So let's now move to the live examples using this strategy. All right, guys. So now we are at the charts. I actually thought to myself, let's actually work through this week. What happened this week, right? Because it's a good example. I mean, really, it was a good example. I'm going to show you some of the trades that I have even taken myself during this week. So which week is this? Which is the week that I'm talking about? It is the week of the 9th of March. It starts here at the bottom and then ended here on Friday, the 13th of March. And now you'll clearly see there's a lot of gibberish here on my charts at the moment. As you can also see, I have a few indicators here that makes my life easy. I do have a trading view account that makes my life easy. So this is just the essentials license, the first one. That's perfectly fine. So I have 5 indicators, actually 4 indicators that I make use of. I used to use the VWAP tool. So you see, if we're below the VWAP middle line, it's going to sell. If we're above the VWAP middle line, mostly what do? We buy, right? So, but it's not, and as you can see here, it works well when it trends, but when it goes into a range, what is this? Bad. Very bad. It's just bad during a range. It's that's why I don't make use of it anymore. So it works during trending markets, but it's really bad during a range, seriously. So I'm actually going to remove it from my indicators, and I'm gonna just, so if you want to make use of the free team the free trading view account, there's only a few indicators that you would need to be able to use that's going to make your life easier. So let me just remove the ones that you don't really need to use, which is this one here on the right hand side. This is literally, I choose, as you can see, it changes as I choose it to change. This just makes it easy on my eyes. When I see bearish, all right, cool, I look for a bearish trade. If I see bullish, I look for a bullish trade. That's all. That's all what this is about. This is just to keep it easy for my mind, psychology wise, at the end of the day when I look for trades. So, but is it a necessity to have it? Not really. So I'm going to remove it. So on the free trading view account, you're going to have 2 available indicators that you can make use of. All right. So what are the 2 that I make use of? So it is the session indicator. As I explained in my strategy, the times of the sessions. This really does make things easier. Because why? Take a look here, for instance. So what happened here when this London session low was taken? Price had a reaction. What happened here when the London session high was taken? Price had a reaction. And price made a 61.8 fib retracement, back down during Asian session and started going up. Crazy, right? So price went up. Here's the Asian session high. Here's the London session high. After the New York session high, price took those 2 out. What happened? Price had a small reaction to that. How big was that reaction? Let's see. Almost a 50% retracement on the Fibonacci tool, and then price started going or continuing this trend. So does the session indicator help me to see where liquidity grabs happen? Absolutely. This is absolutely the reason why I have a session indicator on my charts. It makes it so easy for me on the eyes. Take a look here. What happened when we took this Asian session? Took it, reaction. We tapped the London session eye. We took it, we had a reaction. That's it. That's literally it. That's why you need to have your session times correct. That's why I posted the session times in the slides at the beginning of the video. All right, so what other indicators do I make use of? The fair value gap indicator. This makes it easy on my eyes to see where there are actual fair value gaps in the candles. So here I can clearly see candle 1, candle 2, candle 3 with a gap in the middle candle. Cool. Bearish fair value gap. We respected that bearish fair value gap. Oh, I actually closed above it, but we haven't closed above the candle body of the second candle of the fair value gap, and price reacted to it and went down. Right? Easy as that. Here's another one. There's a fair value gap, and here's a fair value gap. Yes, we closed above this one. We went up, we closed above this one. But what? We respected the second one. So this is actually a 4 candle fair value gap formation. Let me show you. Candle 1. Candle 2. Candle 3. Candle 4. So it's a 1, 2, 3, 4 candle formation, where either this one can be reacted to or this one can be reacted to have a reaction with the trend of that fair value gap formation. So some people will start buying here when they see, oh my goodness, this fair value gap is being disrespected. Golly gosh, what are we going to do? In the meantime, boom. We actually respected that top fair value gap here, and we disrespected even this new bullish fair value gap that was created. Yeah, disrespected it. And then what happens next? We wait. We actually had a liquidity grab here during the Asian session. Yeah, it's the Asian session. We actually also respecting a Fibonacci retracement here at the 61.8% level. Trust me guys, once you start using the Fibonacci tool in your favor, it's definitely going to help. All right, let's just wait for it. Cool. All right. So what's happening here now? All right, this is the first time that a bearish fair value gap has completely been disrespected. We closed above it. And what next? Price created a bullish fair value gap. And this is what's called a reversal. That's it. Bearish fair value gap gets disrespected. Create a new bullish fair value gap. Let's see how far we retrace down to that level before price go up. Boom, 45% at least, and boom, there we go. Take a look at that. Take a look at this. How beautiful is this? Come on now, come on. So yeah, this is why I love the 15-minute time frame for these kinds of entries. The 15-minute time frame, I'll always use the 15-minute time frame for entries, but I will never use it for direction. It will always be just for entries. But with that said, the 15-minute time frame is also sometimes an interesting indicator to see if the higher time frame starts turning bullish. Take a look. Now we're on the 1 hour time frame, right? So what happened here? We went down, we created a bullish fair value gap here, and price just went up. didn't need to retest this. It just went up. That's it. Take a look here. Bullish fair value gap created, price went up. Bearish fair value gap created, price kept going down. Kept going down, kept going down. And then it's only here we started closing above the first 1 hour fair value gap formation or bearish fair value gap formation. Take a look. There's the candle body of the 1 hour candle. Closed above it. So we disrespected this fair value gap completely. Price went down. So it took even more liquidity here. But take a look at this week. Take a look at this candle week. Rejection. 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 Boom. Lift off. Because why? We started closing above a 1 hour bearish fair value gap, signaling a possible reversal. And boom. We got the reversal. So yeah. Any case, this is just a part of my method for when I want to see if a 1 hour time frame is bullish or bearish. So at this point in time, let's do this. At this point in time, what am I doing? This. Here we go. All right, cool. So at this point in time, we were still bearish. The moment that we closed above this, it started turning bullish. And here we were completely bullish on the 1 hour time frame for this brief period of time before price went down again, and we were still bullish. Why are we still bullish? Because we have respected this bullish 1 hour fair value gap formation. And like I mentioned earlier, 61.8 Fibonacci retracement. Rejected, rejected, rejected. Boom. Started going up. Beautiful. Absolutely beautiful. All right. So this is just a quick video, or just a part of the video that explains how price moves, how it starts changing the direction based on the fair value gaps that I explained in the slides in the beginning of the video, and how you use it for continuation trades. All right. So now let's get down to how do I mark out my liquidity levels. All right, so let's get started on the weekly liquidity level markout. All right. So I'm going to delete everything from my charts. Everything. Boom. Whoosh. All gone. So the only indicator that I'm going to leave on my charts is the session indicator. But I'm also going to make use of the section on the right here that does not have the sessions activated for a reason. Because I want to focus on the liquidity levels. All right. I'll leave the fair value gap indicator on. That's fine. So let's go to monthly as a start. All right, so what are we looking at on the monthly time frame so far during March? Oh my goodness, we are actually tapping a bullish fair value gap, a bullish monthly fair value gap. Insane. Great stuff. All right, so what do we also see? There is a monthly low. Yeah. There was actually a monthly low here as well. There we go. Yeah. Boom. Monthly. You could say a monthly liquidity level or monthly low. Right. So during the March, we are actually inside March right now. So the reason why we had such a harsh reaction to the upside in the beginning of March is because we tapped a monthly liquidity level. All right. So I'm just going to keep it simple here. I'm just going to say monthly liquidity level. Let's make this a month, the previous month high. BWH. Previous, whoops, monthly high. I'm gonna make this the previous monthly low. BW, not W, month low. All right, there are other levels as well, like you can mark out the 80H all-time highs. Perfect. In any case, let's move to weekly. All right, so here is what we actually want to be. So we can see there's a few weekly fair value gaps here, bullish fair value gaps. So this will be a weekly fair value gap. We're tapping that. We're tapping the monthly fair value gap as well. Monthly fair value gap. All right. So what is the weekly liquidity levels? It's this weekly fair value gap and this weekly inverted fair value gap. How many times have we tested this? How many times? How many times? When we started closing below it? Multiple times. That's why I mark it out. Easy as that. So where is our weekly levels? All right, so this is during the month of March already. So this was the previous week low. Previous week high. All right, next up is the daily levels, right? So there's other weekly levels here as well that you want to mark out. This one is already a monthly level, previous monthly low. Come on now. All right, so that's already marked out. So here is another weekly liquidity level. So it's a weekly high. All right, we're not going to mark this one out because it's already been taken. Yeah, right, it's already been taken. So levels that has already been taken like this, you just remove because we are in this weekly time frame already. So which ones have not been removed yet? So this one have not been taken yet. This one has been taken, but we are still in this week. So just bear that in mind, please. All right, cool. So let's go to the daily. Let's do this to make it easier on our eyes. Okay. Okay. All right. So what now? All right, cool. We are on the daily time frame. So what daily liquidity levels do we have here? So I'm actually going to use the replay tool to remove Monday so that you can clearly see at the beginning of this week, this is the previous week low. This was the previous week high. It hasn't been taken yet. So I'm going to work through Monday, basically. All right. In any case, let's move on to the daily liquidity levels still. So this is the daily liquidity level. So this is the daily low. Daily liquidity. Right. This is the previous week high, but this is also a daily high, which is fine. Friday. Okay, let's do this. This is the previous daily high, and this is the previous daily low. All right. So what do we have in terms of fair value gaps? This one has been used multiple times, so I'm not going to mark it out. There's no need because I'm going to focus on this new structure here. All right, so there's no fair value gaps that we can really work with. That's close to price at this point in time. There's one here. There's a daily inverted fair value gap. I'm going to extend it to this because this is a 1, 2, 3, 4 candle fair value gap formation. So it's a daily inverted fair value gap formation here. All right, let's move it here. Let's move it here. All right, so we have a higher time frame liquidity levels marked out. All right, so what's next? Next is we actually do the forward testing with the trades, everything based on the liquidity levels that I've been walking out. So let's move forward. All right, so let's get started on Monday, right? So for this, I'm going to go down to the 4-hour time frame because this window here on the right hand side, I'm going to keep on the 4-hour and 1 hour the whole time to keep track of our liquidity and bias, right? So basically what I'm going to do is I'm just going to do this, add this to entire layout. I'm going to turn this on. I'm going to keep it here on the right hand side. Don't be worried about the top one at this point in time because the bias is specifically, I'm going to make use of 4-hour, 1 hour, 15 minutes, right? Cool. So previous day low. So now let's focus. Let's focus. We are going to make use of the 15 minutes time frame. Okay. Move these levels. Yeah, there we go. And now we can actually see what's going on here. This was Friday's New York session. All right, cool. Previous day low, previous day high. There's a daily liquidity level here, and there's the previous week low here as well. All right, cool. So let's get started. So this is going to be Monday, right? So I'm going to start moving it on the 15-minute time frame. We open up with a very nice gap here. And we like gaps. Why? Because they are an extremely high version of liquidity. A lot of orders stuck here. And here at the top where price wants to go to. What did we do during this open? We took the daily liquidity level here on the left hand side. We took the previous week low as well as the previous daily low, right? We tapped, what else did we do? We tapped a weekly fair value gap. Crazy. All right, let's move on. Let's move. So yes, there is going to be a fair value gap here on the 15-minute time frame, but let's just move on. Okay, what did we do here? This is extreme. Extreme. Why is this extreme? This is a monthly level. Previous monthly low. And what are we doing now? Price is actually going down to what? What is price going down to? A monthly fair value gap. Boom. We tap that. Let's watch what price do next. This is still during the Asian time frame, right? Take a look. Okay, there's our first 15-minute bullish fair value gap, but we can't say we're still bullish 100% yet. Price started going up. And I'm asking you guys, this is a massive higher time frame fair value gap. How did price react so big? It's because there's a lot of orders stuck here. There's a lot of orders stuck here. It's a monthly level. It's a monthly. That's why I'm telling you guys, if you start marking out the higher time frame confluence, like month, like higher time frame fair value gaps, weekly fair value gaps, daily fair value gaps, monthly lows, monthly highs, weekly lows. We've taken the weekly low, monthly low, and we tap the monthly fair value gap. Crazy. Crazy. All right, cool. So let's just focus, right? Because what? Currently everything is still bearish, even the 1 hour time frame. So we can't really look for a buy or a trade, any kind of trade right now. I only focus for during London sessions and New York session. So here's the start of the London session. All right, cool. So what's happening? The 15-minute time frame is clearly bullish here. Clearly bullish. We started closing above our last fair value gap here. We started turning bullish here. But what else? We're on the 4-hour time frame. Let's go down to the 1 hour time frame. What happened? We created what? We actually did what? During this move up, we closed above a 1 hour. fair value gap. So, but what is this now? Since we closed above it with a decent candle body, it turned the 1 hour bullish. Boom. Here we go. And this is the first time that we can actually look for a retracement trade. 1 hour time frame is now bullish. 15-minute time frame is now bullish. Where's our entry model? Okay, here's our 1 hour fair value gap. We tap that. Boom. That's our entry. That's our entry. Solid entry. Why can't we enter right now? Why can we do that? Because we already have our bullish 15-minute fair value gaps being respected, mind you. So I took a buy. I took a buy here. I took my stop loss here at this beginning of this fair value gap formation, and I took my take profit here. There we go. Took my take profit there. Now take a look. Take a look. This is a 1 to 1.75. Just have a look here and have a look here. What's happening? Let's just do this quickly to have more space to just use our eyes, right? Take a look on the left hand side. Here's our Asian highs. Take a look here. Take a look here. Boom. Beautiful. Beautiful, beautiful, beautiful. All right. Just no other way of explaining this. Absolutely crazy. Really, really cool. All right. So what now about the next movement? So now we wait for the New York Open. So I actually started looking for a retracement trade from here, which I should not have. And I actually took a stop loss for being an idiot. So that is no other way of explaining it. I was an idiot. Instead of what? Instead of, remember, what is the 15-minute time frame right now? Bullish. What is the 1 hour time frame right now? Bullish, right? Take a look here. What's this? Bullish movement. This is gibberish. Whatever is happening here in the middle is gibberish, because what? We are still respecting this movement confluences. So if we print a bearish fair value gap, yeah, whatever, because why? We haven't closed below any of those 15-minute candles. We have been respecting that fair value gap. So what trade could we have taken for New York Open? We have been respecting that. There's also another 1 hour fair value gap here. There's another 1 hour fair value gap here that's being respected. You can let's call this the 1 hour fair value gap. So how could we have caught this buy trade? You could have entered it anytime in this area. Anywhere. You could have taken your stop loss here at, I would say, candle 1, candle 2, candle 3, or candle 1, 2, 3, 4. You could have taken your stop loss here or here in this area. Yeah. So you could have taken it here or here and aim for the skies. Currently, the nearest high that could be taken for a take profit is this one here, which have clearly been taken. Perfect. Or you could have what? Extended until you get the gap filled, or even another daily level like this. Previous daily low. Let's go. Boom. How beautiful is this? Come on now. Come on. Beautiful, beautiful, beautiful. Like I'm saying, all this structure in between here is sideways movement. So once you see this, don't get ahead of yourself and say now, oh goodness me, we close below a 15-minute bullish fair value gap and close below this candle to change 15-minute to bullish, to bearish. No, we're still respecting this structure here. We're respecting that structure here still. If price went down and closed below these candles on the 15-minute time frame, if If we close below this level, I would have said, okay, cool, we're getting a rejection. We're getting a reversal on the 15-minute time frame. But the 1 hour is still bullish. So, and also, what's the 4 hour? Let's have a look here on the right hand side. We created a bullish for our fair value gap here. What did we also do during the open of the New York session? Let's just remove this. Let's see what price did. What did we do? We tapped that 4 hour fair value gap. And what did price do after that? We lifted off. Insane. Absolutely insane movement. So you could have also looked at it this way. So some people that use the Fibonacci tool on the lower time frames to look for entries, they could have used from the low of the London high to the high of the London high and say, oh my goodness, we have a 61.8% Fibonacci retracement. And we start going up from there. This is absolutely insane. Insane, insane, insane. I would really like to keep this this recording going, but for the sake of explaining the strategy, I'm going to stop right here, and I'm going to rather do an extra recording based on this weekly's movement or this week's movement, and I'll post a video to that, and I'll send you a download link for that video. So yeah, I really hope you guys enjoyed the explanation for this. This should be bullish, as you can see, because now the 1 hour and the 4 hour time frame is bullish. And what happened? Price reacted respectively. Price respected it. Absolutely insane. Really, really insane. So yeah, guys, this is a crash course to my Road to Futures challenge, or Road to Futures trading strategy. It's based on ICT, same like Wes from Wesley Trades HQ. And I am a partner trader from Wesley Trades HQ. And I have been trading this strategy for a very long time. And I'm starting to see, and because I'm a little more, how would you say it? I'm basically married to the strategy. I'm basically, the more I respect the strategy, the better my results get at the end of the day. So yeah, I really hope this is a good explanation on how my strategy works. And yeah, hope you guys have a good one. Cheers. Alright guys, so let's at least break down another day, which is Tuesday, right? So since we know that we've already worked with Monday's buys, we can actually take a look here, right? We could actually have taken this buy anytime here, right? Or after they printed that new 15-minute fair value gap, you'd have had your low place there, and we, like we discussed, we can target the previous daily low level as the TP target. So yeah, that's it. That was Monday. That was literally Monday, because Monday just skyrocketed into the air. It was absolutely insane. And that whole move just because why? We took out previous weekly low. Okay, previous daily low first of all, previous weekly low, previous monthly low. We tapped the weekly fair value gap from the bottom. We tapped a monthly fair value gap, and only after we've tapped this monthly fair value gap, boom, price started reacting this harshly. Insane, right? So that's why higher time frame confluences, like most of the times, they do win. So once you have them correct, it will open up your eyes. It will open up your eyes. All right, let's move forward. Right, so I'm gonna have my 4 hour direction here on the left, on the right hand side. I'm gonna have my 15-minute time frame here on the left hand side. So let's move forward to get to New York. Take a look at that. That's PM session. That's the last hour. The last hour of the NASDAQ open. And take a look here. What level did we reach? We reached the Friday's New York high. Boom. That was an insanely good. That should have been an insanely good take profit level for this move up. Insane. Really, really cool. Any case, let's just move forward. Now we are where? The start of the next Asian session. All right, cool. One level that I haven't marked out, actually, at the beginning of this video, is the daily open price level or the weekly open price level, and they are very important. So I'm gonna mark this out as the weekly, the new week open gap or the new week open price. I'm gonna name it NWOG or in new week open gap, since most of the ICT traders make use of that description, right? So new week open gap, and that was also the daily open gap for this day, specific day, right? So now we're going to mark out the first daily open price of Tuesday, which is this new day open gap or new day open price. Our previous day high is going to be now here, since that was Monday's New York high. Now we're going to have a new daily liquidity level, since this was a daily liquidity level that haven't been taken yet. So this is daily liquidity level. Very good. It's a very good level for liquidity. Previous day low was here. We've already been taken, broken through it, etc., etc. But now it's going to move to here at the bottom. So what now? We're on Tuesday, all right? We've marked everything out already. Let's just quickly mark out this. You see this gap here, right? This whole gap is actually also a 4-hour fair value gap, right? So now it's changed it into a 4-hour inverted fair value gap. So that's important to notice. All right, let's move forward. Also, 1-hour time frame is also still bullish at this point in time. And I would say the daily time frame is now bullish as well. The daily bias is bullish as well, but we're not going to focus on that too much. In any case, let's move forward because we want to move into the London session. Let's move, let's move, let's move, let's move. Daily open price have been taken a few times now already. We have a new 4-hour fair value gap right here. We have one here. Let's do this. We have one here. And we have one here. All right, let's just quickly move forward. Mark it out. Be aware of them. That's why we mark them out. We must be aware of them because they are what? They are liquidity levels. Liquidity levels. And this is also a 1, 2, 3, 4 candle fair value gap formation. So we can actually extend this fair value gap here. So price can react in this entire area before starting to go up if it wants to. If it wants to. If the market really wants to. All right, cool. So let's move forward. Boom, London open. What did we do? Took Asian high. Asian level high. Here we go. Took previous day high. Beautiful. All right. Okay. Let's move forward. Okay. Boom. We took that other daily liquidity level here as well. Beautiful. Right. Here we go. There's actually another daily liquidity level here. Asian, London, New York. No. That's the one. That's also daily liquidity level. In any case, let's move forward. So we actually took an Asian high and a what? A daily high and another daily high level. So this is grounds for a possible reversal or retracement move. So at the beginning of the video, I explained you get two types of trades. You get trades with the trend going up. As you can see, we have our evidence that the 15-minute time frame started turning bullish after closing above this bearish fair value gap. We started going up. That's it. Boom, easy as that. And we respected these fair value gaps going up, right? But now we already got to specific targets, previous day high and another daily liquidity level here on the left hand side. So if the 15-minute time frame should turn bearish if like now, boom, right, like right now, you could take a sell as a retracement, right? So this is actually what I did on Tuesday morning. I think I did not wait for a retracement. I can't remember. I think I actually entered the trade as this candle closed. Right, there's sell, there's the high. So what do you target? You target actually the new day open gap. That's a good target. All right, let's see if we make this. Just keep in mind, we are still bearish on the higher time frame. Please, just keep this in mind. All right, this is a retracement trade against the higher time frame bias. Against, right? There's a 1 hour time frame, right? We're actually tapping that fair value gap. So what now, right? Let's see. Okay. Boom, fair value gaps. 1 hour fair value gap. Whoops. 1 hour fair value gap. So we could do one of two things, or we can trade the retracement, or we wait for 15 minutes to turn bullish again inside this 1 hour fair value gap, and then go with the ride going to the top and target this as the take profit, or that as the take profit, or even one of these sessions highs as a take profit. Let's mark these out as liquidity levels as well. Right, there's another liquidity level, whatever, right? Session liquidity. All right, so this is what I did. I think Tuesday morning, if I remember correctly, price went down like halfway. Boom. I think I took my profit here. I think this is where I took my profit. Yeah, because this was the level where the Asian session high is. I think I took my profit here. Yeah, boom. There we go. I think that was my trade Tuesday morning, because I remember it as daylight. All right. Any case, boom. There we go. Price went down to what? The daily open price. And wouldn't you know, what is this? What is this as well? So if you take a Fibonacci retracement move from this low to this high, at what level are we? The 50%, the golden zone, the Fibonacci golden zone. So if price starts retracing up here, we might get a nice buy here as well. All right, so basically, what's next? So this is the move for London, really. There's nothing else you could really do, but just keep an eye on this Fibonacci retracement. This is a clear Fibonacci retracement that the bigger guys, the bigger investors can make use of. And the 1 hour time frame is still bullish, and the 4 hour time frame is still bullish. Why are we not bearish yet on a 1 hour time frame? Simply because we haven't closed below that level there yet on the 1 hour time frame. So let's just give it some time. All right, so let's see now for New York. See that massive rejection on the 1 hour time frame, very close to 9 hour, very close to 9:30. And yes, we printed a bearish fair value gap here. All right, let's just be wary of it, but not just keep in mind, what did I explain to you at the beginning of the video when it came to Monday? So when a fair value gap structure is created and it's being respected, then you work with that respected values for your trades. You only go against it if what? If we completely disrespect the fair value gap, completely, and then you would say, all right, so 15 minutes is now bearish, etc., etc. But you still work with the bias of the higher time frame, or you make a retracement trade that I did like here during London. All right. Any case, so what now? We respected that 1 hour fair value gap. We respected this 4 hour fair value gap. We actually tapped into it again. We're respecting this Fibonacci retracement at this point in time. And the 15-minute time frame started turning bullish. So why is the 15-minute time frame now bullish? All right, so we're actually still in the London session. So let's just be wary that we are now bullish. Oh, no, we're not bullish yet because we haven't closed above that candle here yet. Not yet. Not yet. So what is this? Oh, sorry. This is a 1 hour fair value gap. All right. And this is a 1 hour fair value gap. In any case, let's move forward. So what are we going to wait for? We're going to wait for a liquidity grab. First of the session, etc., etc. And then we're going to make use of that as a buy, possible buy. Or now with the 15-minute time frame already started turning bullish. And what else? We nearly tapped that fair value gap again. So you could have actually started buying from this level. This is a very nice buy. Very nice buy. You could have actually bought from here. Ratio stop loss here or here. And you target the nearest highs. We already took the liquidity. What liquidity did we take? We went to the new day open gap, new day open price level. We tapped this 1 hour fair value gap. We're respecting the 61.8% Fib retracement level. 15 minutes started turning bullish again, and then again we are bullish all around 4 hour, 1 hour, 15 minutes. Okay, let's move forwards. Whoops. All right, we're going down, tapping the 61.8% level. And we were most likely, if your stop loss was here, you were so nearly tapped out. It's not even funny. But let's move forward. Take a look at that. Come on, man. Clap hands for yourself. Seriously. That was very well done here. Take a look. Take a look at this. Because why? Your stop loss was appropriate. If your stop loss was anything lower or anything closer to this level here, you would have been taken out. Taken out. So yes, we did take what as well? London liquidity. We did. This is part of the London session low. We don't have to necessarily take this completely out. We can just touch the wicks of the 5-minute or the 15-minute of that specific session and have a reaction on it. That's all. Take a look at this. How beautiful was this buy? Come on. Seriously insane. Really, really cool stuff. So this was the New York move. Literally, this was the New York move. Very, very cool move. I think I did not take this trade, but when the reason why this is so fresh in my mind is because I actually did the backtesting on it, because I saw all this confluences for the buys. It was absolutely insane. It was so beautiful. I caught this sell, but I did not caught this buy, but it was there. It was absolutely insane. It was there. 1 to 2 risk to reward. Easy. There we go. 1 to 2 risk to reward. That's it. Beautiful. Beautiful. And now I'm going to tell you guys, so why am I only viewing a small bit here on the right hand side of the higher time frame and not too far back? Because why? We already done working with the structure. We focus, when we are looking for trades at this point in time, we focus on the higher time frame structure that's currently in front of our eyes. Just keep this in mind. That's why I don't need to go a days back, days and weeks back on the higher time frame. No need. We are prices here. Why do you want to look at structure that's far down below or far above? No need at all. Any case, I hope you guys enjoyed this one. This was really, really good. So yeah, thank you so much for watching, guys. This is gonna be a long video, but I really hope you enjoyed it. Cheers.